Welcome, everybody. I'm Andrew Lambert, head of product for our card issuing and banking as a service initiatives here at Cross River Bank. Thank you so much for joining us today as we kick off Cross River's Faster Payments webinar series. The series of content will explore Cross River's fintech partners, specifically those who are using our payment rails to enable faster payments, helping them to drive adoption rates, and most importantly, transforming the way their customers transact. I'm thrilled today to introduce Gil Akos, co-founder and CEO of our partner Astra, a transfer automation platform. Astra has been at the forefront of bank-to-bank transfer technology for financial institutions, fintechs, and startups. So we're so pleased to welcome Gil today. Cross River's own Keith Vander, our head of payments, will be joining Gil in the conversation. Thank you again all for being part of the first webinar in Cross River's Faster Payments series. So let's get the conversation started, guys. I did a brief overview, but Gil and Glenn, or Gil and Keith, why don't you guys introduce yourselves to the group and we'll kick it off.
Sure thing. I guess I'll go first. Thanks for having me again. I'm Gil Akos, co-founder and CEO at Astra. We offer a payments platform where we're providing infrastructure for other fintechs, enterprises, and financial institutions to move money instantly and securely. Really happy to be partnering with Cross River for a number of our solutions and eager for the conversation today. Over to you, Keith.
Yeah, thanks, Gil. And I'm excited that we're kicking this webinar off. Faster payments is a big part of what we do here at Cross River, and I'm excited for this first one specifically to talk about what Astra is doing and push to card. It's something that I've learned a lot about since coming to Cross River. Just a little background on myself. Prior to Cross River, I was at American Express for a number of years, and prior to American Express, I was at First Data. So I've been in payments for quite some time, and I think the amount of change that has happened just in, say, the last 5 years has been tremendous. So I think this webinar is very timely.
Fantastic. Thanks, guys. Why don't we start a little bit broader by talking about maybe faster payments in general. So Keith, faster payments has been a big buzzword for the past couple of years, especially now in the US. How do you see the trends in faster payments? How are things progressing?
They're getting faster. The adoption curve is increasing. We're just seeing an increased demand. Obviously, there was a huge uptick in e-commerce transactions coming out of the pandemic. Now with interest rates rising in large dollar payments, B2B payments, there's this desire to move money faster. And then with fintechs creating really innovative solutions to move money, both in a B2B scenario, but then in a consumer scenario, we're seeing this movement away from the legacy money movement rails, ACH, and wires towards these faster forms of payment that might be more consumer friendly. So there's also an increase in partner banks out there, which I think is really helping fintechs provide innovative solution. Prior to the concept of partner banks, innovation was maybe harder to roll out for fintechs and technology companies who wanted to focus on financial services. So there's been an increase, and really just probably since 2021 maybe, with RTP starting to ramp, and FedNow coming up, there's this increase in demand for faster payments.
Yeah, and I think dovetailing on that, we see that in our business as well, both in terms of the macro trend and the timeline. But I think the way that we end up talking about it with our customers is that faster payments, whether it's real-time settlement or some sort of accelerated settlement from the time that the transactions is initiated to when the funds are available, has really become table stakes for any product, whether you're serving businesses or consumers. The success of products like Cash App and Uber And the fact that a lot of even our work now moves to an on-demand, not a periodic time frame, means that the access to those funds and having the settlement happen faster is kind of expected, right? What that then means is that there are broadening use cases that require technology to make those payments both fast and secure. And that's what I think is so exciting about where we are in this moment in time, and why I think our partnership with Cross River is so exciting for fintech writ large, because it means that your use case will most likely be accommodated by way of the infrastructure that we've built together and we're offering as solutions, such that time to money is really, really condensed. And you can offer that feature or capability to your users without necessarily all of the complexities of having to build up everything yourself.
Yeah, and I think if you think about what's happened in payments, it's been, so I got into payments and checks were still a big part of payments, and consumers are used to doing things not in banking hours, right? They're used to doing things, whether it's gig economy workers, um, working over the weekends, and being able to get paid when you work on the weekends. Like, why do you need to wait 2 weeks for paychecks? Why not get paid instantly, even if it's not during bank hours, right? The idea that payments is constricted to 9 to 5 or 9 to 6, Monday to Friday, as long as that Monday to Friday is not a bank holiday, is kind of ridiculous, because people are truly, it's a 24/7 world, and so payment rails should be 24/7.
Totally. The economy is 24/7, 365. Labor is 24/7, 365. So it's like the ultimate challenge of what happens at 5:05 Eastern on a Friday, right? Like there are situations, whether it's a business, right? A lot of our recent customer growth has come in the trucking and logistics space, which is super interesting. And so like a delivery has been made. The truck cannot leave the lot until a payment is received, because the business needs to know that the funds are there before they release the driver. Or I'm the driver, I just finished my job. I drove all the way from Idaho to Texas. I would like my funds now instead, and maybe I need them to actually fill my rig up to drive back to Idaho, instead of having to actually say, okay, well, I got to wait till Tuesday, because that's just how typical bank timing works from an ACH perspective.
Yeah, and I think, just to jump in with a few statistics, I think we're seeing that kind of demand play out in the market. So we've heard from both the big networks, MasterCard and Visa, with respect to push to card, and Visa telling us that they're seeing transaction activity and volume increase by 55% when debit card issuers receive that first push to card payment. And from a growth perspective, MasterCard telling us that they're seeing 45% year over year growth from third quarter 2020 to 2021 on send. And those metrics are at this point a couple of years old, but they're also telling us that they're seeing similar trajectories even going forward through the current time. So maybe we talk a little bit about, Keith, the push to card payments from a customer perspective here at CRB, and drill a little bit into what it takes to actually implement that.
Yeah, and I think if you think specifically about push to card, it's like all the faster payment rails, relatively new. The Visa's acronym is OCT, Original Credit Transaction. I think that's very telling to think about how the product evolved. Um, I have experience in acquiring previously, and if you think out about a purchase transaction, that's typical acquiring, that's been around for a very long time. Well, if you think about when you go in and buy, let's say, a hat from a retail store, and then you want that refund, well, that's just a push to your card, right? And then someone said, well, what if you just eliminate the purchase and just do the push to the card, right? And that was the advent of push to card. So it wasn't necessarily too much of a leap to take an acquiring transaction and create push to card, and then that opened up a whole realm of new use cases to compete with ACH. And I think where Visa and MasterCard have been really successful is leveraging their brand, right? Both are very well trusted brands. I would argue in some ways, depending on the banks, even maybe more trusted than some banks out there, right? So and people have these cards already. So it's a very easy consumer experience to get that money faster. They're used to providing their card details, maybe more comfortable providing their card details relative to their account and routing number for ACH. So that's kind of how it's come about. And then from a implementation perspective, a technical implementation, it's very similar to an acquiring. You need a processor, you need a bank sponsor, and then you need the networks. In the way that both networks have created it, it is something that is an easier lift relative in some ways from a technical perspective. It's an easier lift than I would say some of the traditional merchant acquiring transaction processing, given how both networks have set it up.
And Gil, as you were thinking through the different maybe faster payment options, um, I guess how did you get to a conclusion on which faster payment channel to use, and how did that maybe solve problems for your customers maybe most effectively?
Yeah, I mean, I think that's a great question, and it probably is worth taking a moment to talk to our ethos at Astra and how we think about payments. So, we think of the financial system and the flow of funds moving around as represented by a network. And if you want to provide functionality across that network, you have to provide coverage to the different payment instruments that might be a part of a sending and receiving transaction, right? So the underlying rails and what the acronym is that goes with a certain payment type, ACH, OCT, AFT on the polls, FedNow, RTP. Our ambition is to functionalize that flow of funds in more of an AWS style infrastructure. So if I'm a developer or a product owner, I'm just saying, look, here's an identifier for this thing over here. It's a bank account or a card. And an identifier over here for the destination. It's a bank account or a card, either one. And we route the funds accordingly, which means that you have to accommodate both bank accounts and cards on either end of that transaction. So it became critical for us if we wanted to expand the use cases that our customers could leverage through our technology to be able to say, okay, well, you're trying to do a payout to the driver I described earlier. That's coming from your business bank account to their debit card. Well, we have to route using some combination of push to card and other bank rails to get the funds to the destination and have that happen as fast as possible with ideally real-time settlement. Or similarly, a different flow of funds. If we're talking about a B2B use case, maybe there's a part of that is using the push to card rails, and another part might be using RTP. So it became kind of critical that no matter what that payment type is, we build the capabilities and infrastructure that make it very easy to interface with it, and thereby you can do most things with our capabilities instead of having to go all the way down to the payment rail and build it back up yourself.
And I think I would just echo, that's from a Cross River perspective. We provide that base layer of the value chain in the connection to the networks, the BIN sponsorship, the access. We're talking about the banking rails to the Federal Reserve, but then our partners like an Astra will add value on top of what we're providing through a variety of ways, and those are the best partners because we recognize that there's so much in the value chain that needs to be created to create the elegant consumer experiences and customer experiences, and that's not Cross River's DNA. We work with fintechs, and then fintechs work with the end users.
So maybe on that note, Keith, could you tell us a little bit from a Cross River standpoint, kind of what do we require out of fintechs, or what do we look for from maybe our partners as we're onboarding them, and then Gil, as we, transitioning into the rubber meeting the road, as you're launching a, push to card solution or a faster payment solution, could you tell us a little bit about what are maybe the moments of truth, or how much iceberg is underneath the ocean as you're beginning to launch those programs?
Yeah, and I think Gil can attest to kind of the process with Cross River. We work with fintechs, right? So that's financial services tech companies, and oftentimes we see the emphasis on the technology, right? So engineering. Now when we talk about fintechs, I think of fintechs as a company that has a high percentage of their staff as engineers. In Cross River, we got something like 20% of our staff as engineers, right? And so if you don't have a high percentage of your staff as engineers, it's probably not a good fit. It's probably, I don't know if you should say you're a fintech, right? But then what happens is so they've got the engineering talent, they come to us for the technology, they start integrating to our APIs, they start working with us. And then where things sometimes break down is around the financial services component, specifically compliance. And if we're talking specifically about payments compliance, what we're really looking at is BSA AML. So if you think about push to card and how it's evolved from acquiring purchase transactions into a rail that is competing with ACH, and that's so many more use cases beyond just purchase transactions. When you move to other use cases, you need to do things like hire a BSA ML officer, set up a BSA ML program, train your employees. You need to potentially get money transmission licenses depending on your use case and what you want to support. And I think oftentimes that is what our partners underestimate. Obviously, as a bank, as a regulated institution, that is the utmost importance. And in order to play in this space as a partner bank, we demand that our partners have the same level of compliance that we are required to have. It's not something that our partners can outsource to Cross River, because if one partner fails from a compliance front, that impacts all of our other partners. So, the next partner that comes in after Astra, Guild doesn't want to have issues because of someone else, right? And so everyone has to meet the same bar. And I think while it is a lengthy onboarding process, once you are onboarded, it's a well-run program, I would say. Gil, I don't know what. Again, you've gone through it, so you've
Yeah,
experienced it.
I'd say that that's absolutely correct. And, if we kind of tie a bow or connect back to the earlier comments we had about the trends out there, right? If everyone wants faster payments effectively, right? We see it everywhere that time to money is the most critical challenge. It is the most critical issue for businesses and fintechs today. So they want faster, everyone wants faster payments. Consumers do, fintechs do, businesses do, financial institutions do, enterprises do, like it's just through and through. So what that means is if you actually want to implement that and you want to add that set of capabilities to your business, one, the first thing everyone starts to look at is the bright, shiny object, which is the ability to process the payment itself, right? That's part one. You need a partner that is going to be able to provide those capabilities and have it work well. Cross River checks that box through and through, right? It should work well. But then I think it is kind of step two is what is the compliance structure, stance, and implementation such that everyone is compliant and the programs that you onboard are doing so without any bumps in the road, that they're doing it successfully and ready to grow. Now, then comes all the rest. We call the rest of that, if the Cross River is the foundational piece at the base of our stack, we call that the iceberg problem. If you want faster payments, you have to deal with the iceberg. And the reason we use that analogy is you think you know that you need the ability to process payments, and maybe you know a little bit about compliance, hopefully, and you know you need a user interface and your product, et cetera. But then it's like all the other stuff, which really is more treacherous the further down you go, which is around card validations and risk monitoring and transaction monitoring and reporting, and like you just keep rattling these things off that you need, everyone needs. And that's where we try and fill the gap, is to provide the connection point from your product all the way down to Cross River and to the corresponding payment rail, so that you get that secure infrastructure that's really going to work well and is flexible enough for your use case. So ideally, our customers, through the solutions that we offer together, don't have to feel the pain of discovering every layer of the iceberg. Like, it is there, trust us. You don't want that pain. But if you felt the pain, also, we can help solve it for you.
That's excellent. So, I guess maybe pivoting a little bit to customer problems, or rather customer problems that Astra solves. So thinking about, what use cases, we talked a little bit about trucking. I wonder if you could give us a little bit more color there, maybe even dive into sort of cross-border opportunities that you guys are seeing, things maybe outside the US. Would love to hear a little bit about how you guys are thinking about that.
Definitely. So I did speak to trucking and logistics, but that's just one industry that we work with. We also work with vertical SaaS. If you're looking to add payments in and out of your product, we work with banking products. If you're trying to, you quoted the stats around activations for debit cards and how effective that is if you use real-time push-to-card transactions to load the balance, especially on that first sign up. We have different kind of wallet structures for P2P and crypto, funds in, pay-ins, payouts, all using the push to card rails. And then we're also looking at offering additional cross-border capabilities. So if you want to push from the US to an internationally issued debit card, that we're offering that as well.
I think that the cross-border push to card is one of the things that we've seen, that a lot of our clients are interested in, because of the kind of the easy way to do it and the friction that exists today in other cross-border payment rails, right? So if you've ever tried to send money overseas, it's not easy. You've got to worry about FX rates. You got to worry about the travel rule. You got to worry about Reg E, and disclosures around those FX rates. You got to do your OFAC scans. All of those things make it hard and complicated. What push to card offers through the networks is they take a lot of that out of the picture, right? So they can help with the FX rates. They can help with at the end of that transaction that it's being pushed to a card that is issued by a bank that's either a Visa or MasterCard bank, right? So there's a trust, not to say that you can rely on that entirely, but that the card holder, I mean, it's going to a card holder. It's going directly into an account that Visa and MasterCard have allowed to issue cards. So there's a level of comfort around the push to card, and it is fast funds, right? So it's much faster than trying to send SWIFT, again tied to banking hours, and some of the other cross-border payment rails that exist out there. It's also we haven't touched on cost, but it's going to be a cheaper, more consumer-friendly option relative to, let's say, a wire.
Yeah, totally. And as the economy moves to more of an on-demand economy, it's also trending more towards a global economy. So in the marketplace vertical, in our customer base, it makes a bunch of sense. If you are a marketplace and you've got counterparty A and counterparty B, and you're trying to facilitate the flow of funds to counterparty B, well, if counterparty B can only be domestic, that's one set of opportunities. But if your business is kind of global ready, you can now expand the counterparties to the two sides of your marketplace to international participants within that marketplace. And that's super exciting, and it's like a natural step up from what you might be doing today if you are dabbling with faster payments or push to card, and how you can expand your business and the opportunity there.
I think that's great. And you guys are both touching on kind of how how many opportunities there are, how broad the problem space might be. But Keith, I wonder, could you, for those folks who are out there either listening right now or who are watching us recorded, could you give maybe a little bit of advice on how to build a business case? What kind of things fintech should be looking for when they're thinking about faster payments, push to card, that kind of thing?
Yeah. So while probably a lot of the people in the audience are uh, maybe payments geeks or enamored with faster payments, I think we can't
Guilty as
forget about
charged.
Uh,
right.
Ditto that.
You can't forget about the product market fit or the customer acquisition, right? So what is going to be unique about your offering that consumers or businesses are going to want, right? What is the problem you're trying to solve? How are you going to go to market? How are you going to get customers? How are you going to price? What is your marketing plan? All of those things that help you understand how it's going to fit, right? So we at Cross River understand that we are just one part of the overall solution that a fintech is bringing to market. I mentioned before, like we look to our fintechs to provide that great customer experience, and then it's also about marketing and acquiring the customers that I think we've seen sometimes. Um, some of our clients underestimate how hard that can be sometime. There's a lot of fintechs out there, and they're trying to solve a lot of unique challenges. But you need to ensure that your challenge that you're solving is truly unique, and understand what the competition is in your space and understand how you're different from your competition. Ideally, you're looking at a very specific niche use case that maybe has been untapped from a fintech perspective, because there's a lot of them specific to payments. There's a lot of checks are still being written, and I think of any place there's a check is being written, there's room for innovation there. And then whether it's checks, or I mentioned wires, there's probably an area of innovation there. It's just then about, okay, how am I going to acquire customers? What are the unique things about the problem I'm trying to solve?
Yeah, and in your case, Gil, specific to Astra, are there what kinds of, I should say, new and interesting use cases are your customers bringing that maybe you can tell us about without breaking confidentiality?
Yeah, sure. Uh, I guess I'll go back to my favorite one today is trucking and logistics. Just because if you think about the number of source and destination accounts, so the payment flows through the ecosystem within that industry, there are no fewer than like 5 spokes between, let's say, fleet, owner operator of a rig, vendor, factor, broker. Like there's money that needs to flow around, and in almost all cases, the settlement speed needs to be accelerated and or happen in real time through something like push to card. So that one's super interesting to us. It's something that happened organically. We had many more banking customers, let's say 12 months ago, and have moved into this vertical by way of just inbound inquiries, because um, the customers in that space saw the parallel to what we were doing elsewhere and wanted to apply it to what they were doing, right? And they have critical needs when more and more drivers are turning into owner operators. So the cash cycle is critical. In order to serve them, you need to have faster payments. So I think that's probably the most exciting area that we're working in today. Um, the kind of how that relates to Keith's comments around the challenges you might face, I think, there are 2 parts to this. And if you're in trucking, logistics, banking, crypto, whatever lending, whatever your vertical is, that you're going to want to try and map out so that you don't find yourself in a position where you're trying to race to catch up. The first is time to market, right? Like the sooner you can start testing with your user base whether or not this is valuable, the sooner you're going to have the confidence to try and scale up your program. So the whole notion of like what your unique value proposition is, it's really hard to test that if you don't have the actual capabilities. So ideally, you're looking for a vendor and partner like Astra and Cross River that can help you get to market faster. The other side of things, which I think is too infrequently discussed, is what happens then. Let's say you have some success. How do you scale? And how do you do that efficiently, right? You need the infrastructure that works well, that scales effectively, both from an operational and a capital perspective as well, right? Because the outcome shouldn't be, oh my gosh, we're doing push to card payments for our truck drivers now. Amazing, let's grow this business. And then it's like, okay, well, we have to hire like 50 people from an operations, compliance, and corresponding perspective to be able to handle those volumes where things are happening manually instead of an automated or more advanced payment solution, again, like what we're offering as partners together today. That's the thing that I think can be a burden such that your program isn't able to grow and corresponding your business isn't able to grow in the way you had imagined up front.
That's great, and I think we're about to a point where we can pause and maybe pivot to some questions that we got during the registration period, perhaps get to some here in the meeting chat. But before we do that, if you guys, I guess I want to open it up. Any sort of closing comments or overarching advice that you want to give to folks who are watching or listening, back at home with respect to push to card, or with respect to, really, really hard lessons learned. I think, Gil, you've done a great job in terms of things for folks to think about, but anything else before we jump into the Q&A?
Keith, you want to go first?
There's so much, and some of the questions look really interesting, and as you start to peel back the onion, some of it is just a learning experience. I've said it before, just to reemphasize the importance of ensuring that the program that you're creating is a compliant program. Look, none of us want to be facilitating money laundering. None of us want to be facilitating any of the things the bad things that can happen in the financial services, right? That's what fintech is all about, whether it's working with unbanked, underbanked, but it's also making sure that bad things don't happen. And I think that is one of the most important things that sometimes people lose sight of as they're trying to move fast and innovate and break things.
Absolutely. And I think compliance is just, you have to consider the answer to your question around who should you use for faster payments as an infrastructure provider under the lens of evaluating that holistically, right? Compliance is one big piece of that. Speed is one big piece of that. Technical competence is one big piece of that. But like, if you just focus on one of the pieces, then you can find yourself in a challenging situation. Either it takes forever for you to get to market, or you get to market and then you have compliance challenges, right? The ability to push to card is amazing, and it's super exciting technology in and of itself. But as you want to implement that and use it and grow your business with that technology, I think it's critical that you're understanding and evaluating that set of decisions from a holistic perspective. Program, compliance, regulatory regime, the whole thing.
Yeah, I think I had a conversation with a partner a couple of weeks ago, and the comment that they made was the transaction piece is the easiest. The technology aspect of this is all relatively straightforward. What's hard is everything else: fraud monitoring, compliance, BSA, AML, everything else that sort of goes around those transactions that we're processing. That's where the hard stuff comes in, and that's where, I think a lot of folks find out that iceberg is pretty darn deep as it goes into the ocean. So with that, I think we've answered a couple of these questions already just through the course of conversation. So we had one early on about B2B use cases and push to card modality. I think the vendor payments and trucking use cases, that kind of thing, we really touched on those. we've had a couple of questions, both in the chat and then previously around pricing models and economics. And so I wonder if you guys could talk a little bit about sort of philosophies in terms of how to monetize these types of transactions as we're processing them, or we're enabling them.
Yeah, and I think the question around who pays for the faster payment, right, relative to the low cost of ACH is a good one, and it's very use case or business model dependent. If we're talking about gig economy workers, or maybe specifically earned wage access, there it's who's going to be paying. It's not the employee, it's not the card holder, it's the employer, right? They're offering that as a value add to their employees, right? A benefit, right? So you go to your HR department and say, hey, here's a great benefit. Let employees get paid faster. You can't charge the employees for that in that situation. But most other use cases that I've seen, and Gail, I don't know what your experience has been, is it is, pushing the cost as far down to the decision maker as possible. So in that case, it's the end user, the consumer. If you look at, like, let's say cash outs of a wallet, if you want your money right away, you're typically willing to pay a little bit more for that. So therefore you push the cost down versus 2 days, let's say, for an ACH. And so, like, when you have your winnings from your sports bet over the weekend and you won it on a Sunday, well, you push the card is one of the few ways to get that, right? If you want your crypto payouts, those types of things, it's typically providing that choice to the consumer and let them decide, is the speed of this funds worth the cost, and ultimately that's the one who should be making the decision, therefore they should be bearing the cost.
Yeah, and I think we've seen like the full gamut of different configurations, and I think the best infrastructure allows that to be something that is programmatically assigned when the payment is processed. That's how we've designed our system. What that means is that you can, as a product owner, you can design certain user experience flows or incentives to encourage the kind of behavior that's best for the consumer and or the product offering, right? If you're doing a P2P push to card transaction, maybe you make the first one free for the recipient, or you like suggest, hey, sign up for an account and you can collect the funds directly onto your debit card. In that case, like, you need at the transaction level to be able to assign the fee and determine should that come from the source or the destination amount, and have that fee be collected en route, so that you have the ultimate flexibility for your use case.
I think that's great. And we've got a couple of other questions revolving around the faster payments ecosystem. So RTP, FedNow, push to card obviously is the focus of the conversation today. But with respect to push to card, maybe specifically, are we seeing any erosion as things like FedNow get introduced, or as RTP maybe continues to ramp? How do you guys see sort of that interplay between the different channels?
So I think it's complementary. I think the pie for faster payments is still growing, and it's taking away from the slower payment rails, cash, check, even next day ACH, right? And there's still, you look at, I don't know, the Fed study of payments and how much still on, a slower payment rail. I think, there's been some questions in the chat around in B2B, depending on the faster payment rail, if it's a more B2B use case, typically that might be not a good fit for push to card, depending again on the use case. There's not a lot of, there was a question around transaction limit, and we haven't seen the transaction limit on push to card come into play, because it's typically not used for large B2B payments. It can be used for vendor payments, but those are typically smaller payments. If you think about the use case, or the way that the payment is pushed, it's pushed to a card. How many large vendors in a B2B scenario have cards? Probably not too many, or like their AP, or sorry, AR department doesn't want to receive the payment in a push to card mode. They want to receive it through the traditional bank rails, so that's how they reconcile, right? So we haven't seen the transaction limit come into play in the B2B space at all. So it's I think that the other faster payment rails, which I think we'll talk about in future webinars, are very much complementary to push to card. Gil, I think you've looked at both, or soon to be all three faster payment rails, right?
Yeah, definitely. The demand is there across the board, and I think it's just about matching the use case and the flow of funds to the corresponding payment type, wherein there are a ton of opportunities for net new programs to grow with push to card, with RTP, with FedNow, whenever that becomes available. But each one of these payment types has a set of rules, of the protocols that govern how it's used and how funds actually settle, which mean that some are better suited than others, right? RTP is push only. Push to card on the OCT side is push only. Has to come from somewhere. Where those funds come from, where do they start their journey in the life cycle of that full payment? From our perspective, that just means that you have to have other payment types that complement it, right? So you can do something like an ACH and then an OCT, or an AFT and an RTP, whatever those paired of transactions are that match the use case and the corresponding payment instrument that's required on either end of that transaction, right? Like if you're a really large enterprise, you might not want to receive your payments from your customers onto a debit card. Maybe it has to be RTP or FedNow or accelerated ACH. That doesn't mean that the source of that, again, end-to-end transaction couldn't be from a card, or it might also be from a bank account. So it's really about how those protocols are put in place for the corresponding use case, and how the technology is made available that stitches it all together.
Good stuff. What about we've got, just looking through the initial questions and also in the chat, try to stitch a couple of them together. But there's one that stuck out to me that we've covered sort of a couple of different ways in the conversation, but maybe to put a finer point on it, we got a question about what are the hardest maybe compliance pieces to solve, with respect, maybe focusing specifically on push to card. Where do we see, Keith, from a sponsor standpoint, folks stumble the most? And maybe Gil, from your standpoint, as you were launching and as you're onboarding your own customers, where do you see people stumbling, and are there similarities there?
Yeah, and Gil can speak to fraud, and as the bank, our big concern is AML. Also, fraud is a concern, but our partners help with that. But they do go hand in hand, right? A lot of it is about knowing who your customer is and ensuring that fraud or money laundering, because again, they're kind of two sides of the same coin, are not happening. So and there's a lot of third-party tools out there, vendors who you would need to bring into to play to really manage fraud and ensure you know who your customer is. Then you've got to worry about things like account takeover and those types of things. So there's a lot to unpack, and definitely doing due diligence, and then understanding that you're going to need to bring in other vendors typically to build a program that is going to be safe and compliant.
Yeah, I would echo those sentiments. I mean, from the capabilities that Astra offers, we try and handle a lot of that surface area of the problem space, basically connecting where from the product layer and the initial understanding of the identity of the end user or customer down to the payment rail, like building out a lot of the pieces that make all of that work really well, so that by default, you are matching the profile to the payment instrument to the transaction for both sides of the payment if there are two different counterparties. That's the biggest challenge is like, okay, especially if we're doing like P2P or business to consumer or consumer to business payments, where there's two different different people for or entities for the sender or receiver, you have to know and confirm this is person A, this is business B, these are their payment instruments, and now let's go ahead and do the transaction. Because if you don't, you immediately expose yourself to fraud on the source account and AML considerations on the destination account. If you don't have most of that surface area covered by default, you end up running into challenges downstream, which again, the ultimate goal is that payments are made accessible to more product owners through partnerships like what we have and what we offer together. And you're not actually exposing them to additional risk or economic considerations down the road. It just works well, right? That's really what the number one challenge is after you go live. And it's like, how much of that surface area can we handle? And let's find specific specialist vendors for our use case where you need to apply additional risk mitigations or AML consideration capabilities.
Very good. Couple of quick hit questions I think that we can knock out in short order. So rails behind push to card from a CRB perspective, there are a couple of different options out there based on the network. What do we support today for?
Yeah. So we support we've got direct integrations to Visa and MasterCard, and then we've also got processors. So it's important for us and I think anybody to think about redundancy from a technology perspective. So we've built that in again with multiple processors and multiple direct connections to the networks. So that allows us to support obviously not only the Visa MasterCards, but then in the US you've got these other these regional debit networks that surprisingly there's still some of those out there, and we support those as well.
Very good. One maybe for you, Keith, on the solution side. If I'm somebody who wants to offer push to card as a payment as a service, maybe only solution, is that possible, or do I need to enroll in banking as a service maybe more broadly with CRB?
No, push to card sits within the payments offering, so it is again where the think if you the traditional merchant acquiring model, Crossover is the merchant sponsor. So the fintech or the fintech's client is the merchant. The consumer is not our client. They're going to have their card issued by a Chase, or potentially on the banking as a service side, it could be a Crossover issued card, debit card. But they are separate, right? So when we're talking about what we're talking about now is pushing to card, we are the merchant sponsor, the BIN sponsor on the merchant acquiring side. So it does not, you don't need to onboard the end user as a customer of Crossover. And in fact, they do not become a customer of Crossover unless they are also separately part of a BaaS program.
Makes sense. What about, I suspect we may have some folks joining from outside the US. That we've got a question about kind of the gig economy, Uber drivers, that kind of thing, benefiting from faster payouts. And I think within the US, there are a couple of different options that Uber offers in terms of sort of instant payouts and that kind of thing. But maybe more broadly beyond Uber, from a gig perspective, what are you guys seeing as that economy continues to grow?
I think that the number of Uber-like offerings for a specific vertical is growing, right? So like vertical SaaS is starting to integrate with payments more specifically, and then industry-based offerings are starting to add payouts as well. So you've like these two dynamics on two axes are meaning that more businesses are looking to take that infrastructure that Uber has made very popular and apply it into their business. So that if you're working in a auto body shop and you've like finished your day on Saturday, maybe you want to receive some of those funds early over the weekend as opposed to waiting for the typical payroll cycle, et cetera. So it's the infrastructure has value, and that's getting embedded into more businesses, so such that that on-demand economy, or even maybe I'm still getting paid every 2 weeks, but I might want to take a portion of this at a specific time faster using something like push to card. Like those trends are meaning that there are more capabilities, not just in like traditional um, gig economy applications, but that same type of offering is being made available across the board.
Yeah, and like so that's contractors 1099s, and then when you think about what we talked a little bit earlier around cross border, right? So contractors, developers who are offshore, so I guess they're not 1099, right? But they're contractor workers in whatever geography they are, but not in the U.S. You can pay them via push to card if their card is issued by a bank that supports that in a geography that supports that.
Along those same lines, maybe in terms of the support and probably more more specifically in terms of verification, right? Are there ways to verify the debit card similar to, let's say, verifying an account through Plaid, to make sure that the destination maybe card is the expected destination, or for the transaction is the expected destination. I should say that more clearly.
There are pieces that are a part of the overall kind of payment ecosystem that you can start to put together. We've built a proprietary version of that matches, let's say, okay, this is Keith. We have a high degree of confidence that this is Keith, and we've correlated his own profile data. Then there's the card itself as a payment instrument. Is that correlated to the user identity? And can we confirm that the authorization happened within the card networks and that the address is verified? So now you've got an address verification, which should match then to the user identity. So we built all of that so that it's automated and out of the box, part of the capabilities. So if you wanted to do push to card and you are worried about that, um, that's an out of the box solution for the offering that we're providing together.
So it gives a somewhat higher degree of confidence that where you're intending to send the funds go is actually where they're going, and that the person who's sending them is the person that you're expecting to send them. Is that about right?
Exactly.
All right. Sorry, Keith, I jumped on you there.
No, I'm glad you took it first because my answer was not going to, because there's what Astra has done is like Gil mentioned, put pieces together, because there's not one solution. It's a series of things. I wish there was just an API that you could ping and boom, yes. But no, it's not that simple, and so it's
well, now there's one solution.
Yeah, there is. That's right.
I was going to say it sounds like
yes.
Sounds like there may be one now that Astra's
Yes.
built it.
Yes. Exactly.
Very good. I think I'm sort of scanning through the chat to see any other questions here. So what about things like chargebacks, transaction not recognized, that kind of thing. How does that work in a push to card scenario where the fund's actually going onto the card as opposed to, a purchase?
There can be chargebacks even on a push, right? And then Gil, you can talk about the polls too on the AFTs, but there can be chargebacks. It's very rare, and very rarely do people say, "Hey, I don't want the money that you sent me." But there can be chargebacks, and like a wallet load, an AFT, Gil, you seen that, right?
Yeah, definitely. And I mean, on the push to card side, on the OCT equivalent, right, the challenge is less so about chargebacks and more about capital efficiencies, right? If you want to push to card transaction and have it be real time, the funds have to come from somewhere. And that leads to a bunch of upstream challenges around settlement mechanics that you might need to handle, or just don't and use Astra and Cross River Solution. But on the AFT side, that's where the most risk really comes for fraud. And even if you've done the validations that we just described that Astra built, that will help you as a part, getting part of the way there. But then there's inevitably going to be a chargeback. Someone's going to say, I didn't do that. They might not even realize that they did it, or they don't recognize the transaction, or whatever happens, friendly fraud, any number of scenarios. Now you have to actually manage the chargeback process. This is a separate data flow than the actual payment execution. And so ideally you would want to dispute it, have the right information such that the dispute is successful so that you're minimizing any potential loss with regard to those chargebacks. We built a proprietary solution for that as well, so that the chargeback dispute process is automated and you don't have to handle that or it can be burdened by the operational complexities therein.
It sounds excellent. And another proprietary solution from Gil and the team. So another reason to get in touch probably. And on that note, if they do, if folks who are watching this now or are watching it later want to get in touch, Gil, what's the best way to do that for you?
Yep, feel free to send me a line. My email is gil@astra.finance. You can find our website at astrafi.com, and happy to chat about use cases, push to card, pull from card, anything under the sun.
Excellent. And Keith, what about somebody who wants to get in touch with you and the team on your side about push to card or other faster payment possibilities?
Yeah, just like Gil, email me Vander Leest, VANDERLEEST at crossriver.com. I think Denise had posted our contact information in the chat too, so you can get our email addresses right from the chat.
Exactly. And if for whatever reason somebody wants to contact me, you can reach me at alambert@crossriver.com. With the last minute to go, I want to thank you both so much for participating and being so open in the conversation in this inaugural webinar in the Faster Payments webinar series here at CRB. And I also want to thank all of our participants. Thank you so much for all of the questions. Thanks for hanging out with us for the last hour or so as we nerded out on faster payments and push to card. And hope to see you again. Stay tuned for the date on the next one. It'll likely be sometime in June, but watch this space and we hope to see you all again soon.